Okay, Steve, I see you. I'm looking forward to hearing your voice and making you the presenter. I want to thank you in advance for your time today. All you have to do is enable your mic and your screen share, and we'll get going. There it is. Enable your mic.
Hello.
Hi, Steve.
Hello, Dale. Do you see my screen?
I do see your screen. Let me turn up my volume a little bit. You're a little low, but I want to be able to hear you. Great to hear your voice. And, you know, we know each other from Twitter, but I feel we've taken a step towards you really becoming my trading warrior brother, Steve. I appreciate you. I really appreciate you being here. Your content on Twitter is excellent. That's how I noticed you. Why don't you?
Same to you, Dale. Thank you.
Okay, well, why don't you get into a time machine and tell us how it all began for you to get into the trading industry? And you know,
it is already coded in my Twitter name, which is Steve Walker 36. So I start trading at 36 years old, almost 10 years ago. So, of course,
how did it happen? What did someone? Did you read a book, or you had a friend that was trading? How did it happen for you?
No, it was the movie. I watched a movie about the trading, and I decided to start some. I decided to try it. I am a coder also, so I said I can fix this issue. I can make good profit in 2 or 3 weeks time by a good code. So I start coding. And I'm still coding after 10 years. So it took no more than 2-3 weeks, unfortunately.
Yes. Yeah, most people tell me that it takes about 4 years. Was it that way?
Yeah, exactly. So the first 3-4 years wasn't so good. It was a struggling period of time. Losers, winners, but overall net loser, of course. So it took time to put the things together. But at the end of the day, things happens. So
were there any books or any mentors during that journey? I see you have what might be a pitchfork on your screen.
Yeah. For the first years of trading, I was joining the Woody Club. You remember? You know him, Woody Club.
I don't.
The Cam Wood. You know, the CCI club. He was trading with the CCI anyway. Okay. So he was in US. So I joined his club for some time. That was the only place I joined for some time. In general, I learned by reading the internet. You know, like any other else does. So it was a hard way to learn trading, because in fact it's after you learn it, it's easy, but until you learn it, it's too hard to understand what's happening behind the charts. So it takes time, really.
It's also hard to discern what is valuable on the internet and what is just really hype. How were you able to do that? Trial and error? It's
learning by doing. The most expensive way of learning, you know. I did it learning by doing.
Okay.
So it takes time doing that way. Maybe it should have been better to work with a professional at that time, but I didn't take that way. Maybe if I start trading today, I would do it. I would probably do it, but when you think you can do it, you don't take this way. But unfortunately, it's better to take it.
Okay.
This is my conclusion after 10 years.
Okay, well, 10 years, it's definitely, you've shown perseverance, because a lot of people give up. In fact, you know what? In my opinion, a lot of people give up because they're not willing to put in the hard work. And, you know, did you journal your trades, do anything like that to kind of really distinguish when you do a trade, what you're doing right and what you're doing wrong? You know, I'm a big believer in journaling for traders. Exactly. Okay, so that helps.
Yes, without the data sheet, it is not possible.
Okay, all right.
I put a data sheet and I put all the trades in it and analyze them later, because market is changing. You should improve your trading. You should move forward because charts are not staying at the same place all the time. Things are changing. The setups working 10 years ago are not working today, and today the setups working today will not work 10 years later. So you should always improve yourself, and you should adapt the market because it's changing. For example, after 2008, everything has been changed in the market, because when you look before 2008, after 2008, you see different charts, definitely. So algorithms are playing big role actually in the market. The high frequency trading, algorithms, the big banks. So we should all adapt all these things. The only thing I found out after these years is use your stop loss. That's it. Trade with stop loss. Don't lose your account. Prevent from the big losers. The big winners will follow. This is my motto. This is how I trade today.
Yeah, I went to your website, Steve, and I liked that one section about what you're not. And you have a whole list of things like, first of all, you're not the Holy Grail because it doesn't exist. So in your teaching and mentoring, you give realistic expectations for your mentees. You want to go over a couple of them? That's the one I remember, what it's not, and you said the Holy Grail. What else isn't it when you're teaching people?
Dale, it is all accumulation of 10 years of experience. So there are too many things. The mental state is very important. So the trading is not like a driving car. Trading is like a piloting a plane. So you have to mental state in place. You have to strategy in place. You have to money management and risk management in place. And when you put all these things together, then you can make profit. If one missing, then your plane is crash, because it is not a static balance. This trading is dynamic balance. So you should put everything in place. Then this will come together. That gives you gain. So my the thing I try to explain people I work with is, don't afraid from the loser, because it will happen. But don't make it big. Don't turn it into a catastrophe. So single trade will not make you and shouldn't break you. So, and
you never had that big blowout where you said, you know what, I'm not going to put a stop in, I'm just going to use a mental stop and I'll get out, and then it goes through your mental stop and you're still not out, and then you go, you know, maybe I'll average out here. Have you done it? I mean, almost every landmine that's possible. I've done it, or I've seen people do it, and sometimes you even have to learn by getting hit in the head with a hammer, don't you?
Yes, in the first years of trading, I blow 2 accounts, not big, but I blow them because I think that I can do anything. So I was overconfidence take the account from me. So that's one thing. The other thing is you should. Okay, I have a picture beside my computer, which is the trading phase. I tweeted last 2 days ago. So anything doing over, like confidence, like greed, like anger, is affecting the trading. So you should stay cool. You should stay cool and stay still to make real profit, because the market makes you mad. The people thinks that the brokers take their stops, blah blah. Okay, this is one thing. They get angry because their stop taken with one pip, blah blah, in the live trading. That's okay. But I did simulate thousands of different algorithms in the past years, and when I'm simulating the history chart, I also see that many times my stop taken with one pip. So that is not the reality. We just should stay cool when trading, and we just shouldn't turn the losers in the catastrophe. That's it. Just prevent from the big loser. The big winner will follow. So this will make, for the retail traders, I give only one advice. Your risk reward ratio should be good.
Okay. What do you recommend? 3 to 1?
Starting from 2 to 1, you can go up to, the 10 to 1 is not realistic, but 2 to 1, 3 to 1, 4 to 1 is good risk reward ratio for retail traders. If you're a big bank, that's okay. Do whatever you want. You have playing with the big money. You have the margin of drawdown. You have the low cost and everything. But if you're a retail trader working with a retail broker, your risk reward should be good. That's the only way making money with manual trading. If you are a retail trader, if you are trading with algorithms, you really need low cost. And I didn't see any broker that giving that low cost to a retail trader. So for the retail trader, you should take the risk lower and the reward bigger. And this is one of the most difficult thing that I challenge in my trading life, because staying in the winners is very difficult. Okay, you can fix
my shortcoming. Yeah, so how do you overcome what I call first daylight syndrome? You know, say for example, you had maybe 150 pip objective on your trade and you're up 50.
Yes.
How do you overcome not getting out and, you know, thinking, well, you know, I'll take 50 and I could always get back in cheaper than my exit. Yes. How do you overcome that?
That is why I'm explaining my trainees that you should put the data sheet together, that you should track your trades, you should put your data in an Excel sheet, that the MFE and MAE data, that will give you how your trades are going in the past. So if, okay, then you can create a graph from that and you can see what is your trades nominally going the distance. So when you know that, then you can be sure that this you don't have to exit with 50 pips, because your trades in average is going to 150 pips or 140. It doesn't matter. 10-5 pips is not very important. So
how about partial profits at 50 on a portion and trailing your stop for money management? Do you teach that?
Okay. I don't use trailing stop because I don't believe it, because you know there are too many spikes in the market. So those spikes take your, but that's all. Okay, so from trader to trader, from retail trader to trader, things are changing. So what I do is right for me might be wrong for somebody else. So everyone should put their data in the sheet and analyze it. Then they will find out that which is good for them. This is what they should do. For example, I'm actually the one guy from Russia I'm working with. I teach him how to put the data sheet and everything. Now he knows that his trades, his intraday trades, is going 40-50 pips each. So these are intraday trades, right. Okay. Trading with 15-minute charts or smaller. So now he knows that his trades are going 40-50 pips. So why should exit early? But this takes time. So this is the most difficult part of trading, staying in the winners, as I told you 5 minutes ago. You also agree with that. Because, okay, you can put the stop and you can wait. Okay, the stop is taken. I'm out. I will not go on this. I will not force this trade. That's okay. But staying in the winners is definitely needs the data sheet. And this data sheet definitely needs an MFE data and MAE data to put you into the place of seeing what is average of your trades going for the favor of your entry. So when you know that, then you can remember the moment that, okay, I know I have data sheet several times my trade went to 150 pips and I have write it down, I see it. So now you can wait until 150 pips. That's what you can do, because the issue is when you trade with stop loss, your stop is mechanical. You can exit either with stop loss or with a mental exit. That's okay. I use stop loss for an emergency exit. I most probably exit before the stop loss. So stop loss is to save the account. That's it. But on the other hand, on winning side, you have no limit. It can go 100 pips. It can go 1,000 pips. So which one you prefer, 100 or 1,000 or 10 pips? Most probably people preferring 10 pips. But the data sheet tells you how many pips the mostly weighted average your trade goes. So when you work with this data, then you don't get upset if you exit after 100 pips if it goes 10,000 pips, and you don't get upset if you exit if you wait for 100 pips but it returns and takes your stop loss or break even, because you know your data and it tells you that it will go there sooner or later. Updating this sheet, and okay, I advise every trader that they should put their trades into data sheet. They should do it. There is no other way.
So you're a big believer. Write it down. It becomes more tangible to you. Anyone who does NLP would agree with you.
Exactly.
So why don't we switch gears? And it looks like it's Japanese yen day. Everyone's talking about the yen. and
Yes.
tell us a little bit about your setups and things that you use. I look at this chart and I see a 2 drive to a bottom situation, divergence,
Okay,
second low. I'm interested in all your lines and moving averages and why you use them. So why don't you tell me about what I'm looking at?
Okay, this is a code I created for myself, which is, I call it mechanical sieving channel. So there is no parameters to set for this setup, for this code. Everything comes from the market. So it draws the channels and put the moving averages related with the channels. So the data you see here is actually the daily, monthly, and weekly. If I
So we're looking at moving averages. What are the dotted lines? Just channel lines or a pitchfork?
These are the channels.
Okay.
These are the channels. So this is the 4-hour chart. This is the only data that only 4-hour chart, and this is the daily chart. So I put the other data on the chart, which is multi-time frame. It becomes multi-time frame. I put daily, weekly, and monthly. All okay.
Interesting. All right. So on your daily, you have shorter time frames and longer time frames. You have all the time frames.
No. For daily, for every chart, I have the higher time frames on single chart. So this the white lines are the weekly, the green lines are the monthly, and the red lines are daily. So I can see multi-time frame data on this chart, and this chart tells me, okay, if we go to monthly chart, I'll show you that.
All right, that's cool.
It is,
and they're not that far apart, so you kind of have. It's nice when you have confluence between the different time frames, and the lines come in the same.
Yes. So this is the DTL chart I use. This is also a self-coded algorithm to see the trend lines. This is the derivative trend lines. It is okay. Here the Japanese yen, as the other Steve has explained, it is actually broken the main trend line down here. So I'm pretty bearish with the Japanese yen, euro dollar Japanese yen, dollar Japanese yen.
Yeah.
This is what I see actually on the chart. So
all right, let me stop you there. Go to that chart you have. Go back and let me. No, it was, I think, the monthly.
Okay, the monthly one. Okay.
The breakdown of an uptrend, which a lot of people are looking at. You had an uptrend line. Okay, so you have an uptrend line. Is the only thing that would change your opinion about the yen would be getting back inside of that uptrend channel, and if it is unable to do it, your next lines are all the way down at 88.30. Is that a potential target for this breakdown of this uptrend?
Okay, here is the deal. The issue is this trend line is a very common trend line. So what I believe is when we see a very common trend line, then I think that it is not going to be work well. So this is what I think. I'm still bearish with Japanese yen here.
Okay.
Because here is for me the selling power is here, and it is pretty bearish here. So I don't think that it will climb up. Okay. The other thing is this. The dollar index. The dollar index is pretty bearish here. So I'm expecting it to go down to something like 80 here. So
85,
this
85,
80.
What did you say, 80 or 85?
80. I expect it to go down to 80 here.
Okay, to the breakout.
Yes, here.
Yeah. Okay, exactly. I see it. All right.
I'm expecting it to go to down here. Okay, this might be, I might be wrong. So nothing is
right. That's okay.
Nothing is 100%.
Everything you say here, people take with. Look, we're all adults. You know what? We're all captains of our own ship, and we take whatever anyone says as intelligence gathering, but we all make our own decisions. So
of course,
don't worry about it. Okay.
So here is the trend line. One. This is the this is a bounce here. This trend line has been rejected. All this down.
Right.
So I don't see any reject here on this trend line. It may climb up to trend line. That's another possibility. It can happen. But actually, I don't think that while the US bond yields climbing, I don't think US dollar will strengthen. This is what I think. So I'm still bearish on dollar. So
Okay.
And when I go to, okay, this is euro dollar chart, and this
Right.
If we go to weekly, we can see it better. Okay, this is actually, for me, it is accumulating. So I expect it to go to 128 before it goes down. I'm expecting it to move to 128. So I'm bullish since here. I'm bullish with euro dollar starting from 1.5, 105.
Okay.
My first target was 109. Then I move it to 115. Still bullish here, and I'm still bullish until 128. And after that, we can see some correction, because at that moment probably the ACB QE will be ending at this moment, end of this year. So we can see the weakening of euro and some strengthening from the dollar. But before that, I'm pretty bullish with euro dollar at the moment.
Okay. Do you have any idea, based on your technical work, that after we get to 127, what type of retracement you'd be looking for in euro?
Well, okay. Well, okay, if we go to 128, but it's okay. It might be a reject. It might be a strong reject.
Yeah.
Because this is the zone we are talking about.
Okay. Because I've interviewed some people that think that once, they're Elliottians, and they're talking about one more thrust up there, and they're looking for a pretty good correction and big bounce in the dollar that could take the euro back down to, say, 116. Are you seeing anything like that? We get one more high, and then we maybe get a 50% correction off this total bull move?
Dale, I don't like making predictions on two legs.
I don't blame you. I predict it's not great to make predictions, but some of us do it. We have biases, but you're just going to go with the flow and see what happens. The only important thing to you right now is that you're looking for a target of 127.5, 128. That's all that matters right now.
This is my actual target. Yes.
All right.
And so okay, you see here, this was a total mess. The last year was a big mess for Japanese yen.
Yeah.
So as you see here, if we go to, okay, this tells me that this will go down a little bit longer.
The last chart you looked at, that you showed, go back one chart. It looked, if it go back just one. Okay, it looks like if it breaks down under this 1040, that dotted green line, that 92 is possible. That, I was talking about this, and let me see if it makes sense. You see the high from 126 down to 98, that first drop, and then we rallied up to 118. What if we had equality from the last big decline from 125 to 98, from 118 would take it down to about 92, wouldn't it? In a real bearish scenario?
Okay, this is what I think, Dale.
Okay.
This low has been taken. So there is one close below, there is the second close below, the weekly close. These are the weekly close. So it is not able to climb over this low. So this tells me this is bearish. Okay. So this could have been a flat here. This could have been a flat. If this have been closed over into 3 weeks time, then I could call it bullish. But actually, it is closing below this low. So also this selling pressure over the price. So we are also, it also bounced below the median lines, both weekly and in this channel. So I'm pretty bearish with it. Okay, as I said 10 minutes ago, this might be wrong, but this is what I see on this chart.
Okay, you know what? I could tell you're a great teacher. You know why? You're very passionate. Everything that you say comes with a lot of conviction, and
Thank you.
You get right to the point. You don't, a lot of people go, well, this is CNBC analysis. Well, it could go there, but if it's rejected, then it could go down unless buyers come in and push it back up again, unless it fails. Okay, so why don't you go to your website and show us your website so people know how to get a hold of you, so that if they're, after hearing you live or on the video, that if they want to find a good mentor, they could consider you. Why don't you just show us your website now? We'll make a nice little commercial for you, Steve, okay?
Right now?
Yeah.
Oh.
Yeah, we're about at the half-hour mark. Unless there's something else, we could keep going if you want. It's up to you. But I do, before we say goodbye, want you to show your website so that besides at Steve Walker 36, when you started trading, which makes you 46 right now, you young punk. You know, I want people to see, you know, you're talking to Father Time here, so I want people to see your website so they know how to get a hold of you.
Okay, let me open the take me off. Let me open it, then I'll connect back. Okay.
Okay.
Okay. Thank you, Dale.
You're very welcome. Yeah, I could tell you coded your own website too.
Dale, take me off. Then I'll connect later. Okay.
Okay. All right. So why don't we leave it at that? Follow Steve at Steve Walker 36 on Twitter, and when you pull up his Twitter, he'll have the link to his website. So why don't you wrap it up with one more market? Okay, let's go with the S&Ps.
Okay.
Tell me what you're seeing here.
Okay, I have already tweeted about that, which is okay. This is the weekly chart. I logged the weekly data. So these are the two trend lines. This is the trend. These two trend lines. I was waiting to bounce over. So this is the weekly data. I logged the data. Now I'll go back to 4-hour chart with the same data. So then you can see the bounces here. Okay, they are exactly the bounces from here, and this is a perfect flat. I was bullish from here with the S&P, and it was a good trade. I already posted about that, tweeted about that. So, okay, there's another thing I would like to show the people here. When I see this formation here, this is important. You should put it in your mind. This formation, this first down, then a flat here, then it fall down. So you will see the same formation. If you go back to pound chart, let's go back to, this is the same formation here.
Wow. So you get an initial break, a little sideways action, and then a collapse.
Yes, exactly. So when I see this formation on S&P 500, I said, I already tweeted about that day, that it will go further down because the same formation here with the pound. So trading, okay.
You have a name for it? What, I mean, you know, I've seen them before. To me, it looks like you just have a big break and then it can't rally to make new highs. You just get some consolidation and then it collapses.
I don't have a name for that. Anyway,
okay.
The only thing
we could call it the Walker.
Okay, right. That's a good one. So when I see this formation here, I said it will go further. But when you go back to weekly chart, these two trend lines. Why I'm counting on these two trend lines? Because the price is bouncing around them here. The price is bouncing around these two trend lines. So my entry point was here.
Okay.
And it was okay. Another thing here.
How about now? New highs?
How about now? Okay. This is, for me, this is still bullish. I'm still bullish with it because this flat has been held. There is no close below here. There's a perfect flat here, and this is a perfect flat here. So there is no close below this. Okay, the main issue is here. Okay, As long as this 27.20 holds the 50%, this 27.20 holds, then this is still bullish. I won't short it. Anyway, for me, I don't short indices. This doesn't make sense.
Okay.
If I trade indices, if I trade equities, I trade only long, not short. I look for the long trades because when it goes long, it goes long. But short trades, short setups fail very easily. I'm not talking about the Forex market. I'm talking about the stocks market.
Yeah. Okay. All right. Well, that makes. I wish I would have listened to you the last few years. So still bullish S&Ps and
yes.
Bearish yen, bullish euro. So weaker dollar.
Yes.
And stronger stocks, which makes sense. You know, the multinationals like a weak dollar. So maybe not until we have a dollar turn do we get another correction in the S&Ps. And yes. I want to thank you, Steve, for your passion and spending time with us here, and you know, your retweets of my stuff and everything I see. I'm glad I found you on Twitter.
Oh, same here, Dale. Really, I appreciate meeting with you, and I'm very, how can I say, I'm very happy and appreciate that you are doing this for this trading business, for this trading market, for the traders, experienced and unexperienced. So it's very nice to meet you, and I really happy meeting with you and with your team.
Okay, well, my trading warrior brother, Steve Walker, thank you for your presentation today. I encourage people to at least follow Steve on Twitter and go to his website and check him out, because he's been at it for 10 years, but it sounds more like 20 to me. So thank you again, Steve. Good hunting this week, and keep in touch. We'll do this again down the road, my friend.
Yep, sure. Anytime.
All right. That's it for us, everyone. I'll try and wake up on time tomorrow and give you a few looks before Blake comes on. And most of all, my friends, my trading warrior brothers and sisters, remember, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday tomorrow, or see you in the chat room. And don't forget the contest. You know, you could win free subscription. The t-shirts are great. I'm wearing them. The coffee cups are great. I drink out of them. The mouse pad is great. It's the biggest one I've ever had in my career. So get your predictions in, and I'll see everyone tomorrow. Thanks again, Steve.
Oh, thank you, Dale. Thank you.